In this video, I'm going to share with you my weekly swing trading routine. Hello everyone, my name is Michael Lamott. I'm the founder of ChartYourTrade.com, and our goal is to inspire millions of hardworking people just like you to take advantage of the stock market. And the way that we're going to do that in this video is by sharing my full swing trading routine, giving you a little taste of what I do, how I do it, and how I'm able to do it part-time while still managing a separate full-time job and family. Now there's four main pieces to my swing trading routine. The first has to do with market health, trying to figure out the overall direction of the market, the major indices, and how that's going to affect the rest of the stocks that I'm interested in. Part two is actually scanning the market, finding those stocks that I'm going to trade. Then part three is analyzing the setups, figuring out which ones are the best, which ones are offering the best reward to risk, and figuring out which ones I'm going to want to trade. And then also part of that is actually placing the orders. And then part four is analyzing my existing portfolio and managing those positions. This entire process typically takes me about anywhere from about an hour to about 90 minutes max every single weekend. So that's really it. So let's dive in. Now there's 5 things that I like to do when I'm analyzing market health. The first thing that I'll do is I'll actually go to our advanced stock reports, pop it open, and look at what the model portfolio is doing. Now, I understand that many of you watching this may not be members. That's perfectly okay. You don't have to do this. It's just something that I have access to, and so it's something that helps me. So here's what I do. I'll go to the playbook, read that top section, look at the portfolio updates, see what the stocks are doing, and then also see if there are any kind of working orders. That's something that's always it really helps me figure out, like, okay, should I be stepping on the gas or should I be letting up the brake? How are the stocks within this portfolio behaving right now? And are there active setups in the market? And what should we be doing? The way that this portfolio is treated, it's treated like a real portfolio. So just because there's stocks setting up, that doesn't mean that we're going to add them to the model portfolio. So just seeing how Adam Sarhan is managing this gives me a flavor of the overall health of the market. The next thing that I'll do is I will read the week in review. Now that's something that is available to everybody on Chart Your Trade every single weekend for free. Typically it's published on Fridays. At the absolute latest, it's published on Saturdays. But you could go through this. There's a very succinct week in review, everything that's going on in the market, that's affecting the major indices, that's important, that like the major themes, they're all here in this concise blog post. And so I'll read through this, get a deeper dive into what actually happened during the week, and that will serve as another gauge of market health. Part number 3. I'll see what's happening to stocks in growth land. So what does that mean? Well, the way that I find what stocks in growth land are doing are I'll run a series of scans and see what is happening to those stocks. How are those stocks behaving? Are they running high? Are they pulling back? Are they kind of trading sideways? What are they doing? So in order for me to do that, I open up the Chart Your Trade MRI stock scanner. So I come over here, open up the MRI stock scanner, wait for it to load, and this is a process that I used to do with expensive software. It would take me several hours. Now it's just clicking a button. You don't need expensive software. You don't even need Chart Your Trade MRI to do this. All you need are to have a series of scans that you will run consistently and see what kinds of stocks are passing week to week to week and see how those stocks are behaving. If you'd like some examples of stock scans, we have a whole blog post. I'll link it in the description on how to scan for the best growth stocks, and you could take those exact parameters and put them into any scanning software you'd like. I run them right here. So I'll just click submit, run all the scanners that we have. There's 8 of them, and also make it past this ideal growth stock screen. And the purpose of that is to help weed out some of these other stocks and just focus on the best of the best. So this week there happened to be 81 stocks passing, and what I'll do is I'll compare this week's results to last week's and the week before and the week before, and monitor is there growth in the number of stocks passing my scans, or is the number of stocks deteriorating? That in itself is something that's going to give me a gauge of the overall health of the market. If we're in a strong market, then naturally I should see more and more stocks passing because of some of the types of scans that we have. Like, for example, stocks near to 52-week highs. That's something that you're only going to see in a strong uptrending market. Stocks that are showing great relative strength, that's something else that is going to greatly influence the overall health of the market, and we'll see more stocks passing as the health of the market is stronger and stronger. So looking at that, and then I'll go through each of these stocks and see how they are behaving. So once I look through these stocks, after that I'll move on and see what are the number of new highs versus new lows looking like. So on the NASDAQ and on the NYSE, I count the number of new highs versus new lows that are being made. And what I've discovered is that at key turning points in the market, you'll start to see a rapid dry up in the number of new highs, or an expansion in the number of new lows, or both. And you'll typically see this in either of the NASDAQ or the NYSE, or you'll have an even stronger move when both of them are behaving the same way. So the place that I find that is this section right here, new highs, new lows. That's why we included it in the scanner, so that way it could really help give us a quick peek at market health. And that's what we're seeing right here. So number of new highs on the NYSE, number of new lows on the NASDAQ, new highs versus new lows. And you can see just recently we were in the triple digits for new highs, and then all of a sudden the number of new highs dried up rapidly. Now if we take a look at the major indices, and that's actually the next part of what I like to do. Next and last part of how I gauge the overall health of the market, I will come over here and start analyzing the major indices. And you could see right here, right? So January 29th, that's when we hit that high and reversed. And so let's see what January 29th, right? And so then on January 30th, we started to get this dry up, right? So January 29th, January 30th, and from there we've been consolidating it and kind of starting to move down. Finally, the last thing that I'm looking at on these major indexes, let's bring up the S&P 500 again. And I shared this in a prior video specific to TradingView, is looking at the distribution days and also the distribution day count. Now, well, what I really like about TradingView, just to rehash my love of TradingView, is that you could add distribution days automatically to the chart and have them flagged on the chart. And you could also look at the count of the distribution days and have that display on the chart. And to be able to do that part automatically is such a time saver. I can't even explain. To have to go in and manually do this every single time, which is what I was doing with some other very expensive software. It's very time consuming, and if life happens, which it often does when you're managing a separate full-time job and have a family, it's not always easy to keep up with going in and doing this kind of manual labor. To have it done automatically for you, fantastic time saver. So I'll look at the number of distribution days. I'll see how price is behaving with these distribution days, and I'll also see how far extended we are from any kind of a moving average. Like back here, we saw that the distribution days started to pile up. When distribution days start to happen one after the other, that we typically see more sideways action, and we'll see a little bit more of a consolidation. Really, from this point forward, we start to see the number of distribution days dry up, and then it was off to the races. Then distribution days started to pile up again, and then as they started to fall off the count, we started to run higher. So that's the last bit of what I look at for gauging market health. So based on what I'm seeing in the overall health of the market will kind of flavor what I'm going to look at when I'm scanning for the setups and what kinds of setups I'm going to be looking for. So the first thing that I'll do is I'll open up the ChartYourTrade MRI scanner, and I will run all scans, and I'll set it to 80%. Now, the reason why I set the ideal growth stock screen to 80% is because I did a study, and what I found was that when stocks pass this MRI scanner with the ideal growth stock screen set at 80%, they have a much better chance of making a significant move from the time that they pass the scanner. In fact, in 2016, I haven't done 2017 yet. I am still collecting the data, but I'm very excited for this. In 2016, I analyzed every single stock that passed ChartYourTrade MRI and the rate that they passed the ideal growth stock screen. And from the time that it passed the scan, it made a move of at least 50% or greater. And half of the stocks that passed ChartYourTrade MRI at 80% or greater made a move of 50% or greater from the time that it passed. So that's a very, very good hit rate. So even if the stocks that pass at 80% aren't buyable today, it's still something that I want to keep on my radar, because I have that knowledge that these group of stocks can make or have a much higher propensity to make that kind of a move. So I'll scan for those, and typically you don't really get a lot of stocks passing. It's super strict. So I'll look at 80%. I'll also look at 70%, because then it dropped to about 40% or so. So 40% hit rate under the same parameters. So at 70%, we start to see a lot more stocks passing. And so I'll go through each one of these stocks and see what kinds of setups there are, and anything that that looks interesting as a chart pattern, I will then write down and move on to a stocks of interest list that I have. So I'll go through all that. Then, after I go through stocks passing at 80% and at 70%, I'll come up here and I'll run this industry group rotation report. Now, something else that I found is that when a certain industry group starts to rise in the scanner, meaning that a block of stocks are passing from a certain industry group, then that tends to mean that there's something going on within that industry group. Sometimes I'll find stocks that are passing and forming very similar consolidations. Sometimes they'll be already running it could be a lot of different things, but if I'll investigate the industry groups that are showing something abnormal. So let's compare this week to last week. And we'll sort by number of stocks passed, and we could see that software and programming happened to be the largest number, and another stock passed software and programming. Regional banks was right near the top, followed by investment services, and go down the line. And so those are going to be the industry groups that I'll want to take a closer look at and see what kinds of stocks are passing right now. When I did this, I noticed that GGAL, which fell back to Earth today, was setting up over the weekend. So it was doing this move, and then on Monday it gave a quick swing trading opportunity. It fell further and then moved back above this high over here. And so I actually posted this idea on Twitter, and if you were watching it, hopefully you were able to take advantage of this opportunity. Gave a quick what amounted to be a 2R move, and so on this trade you probably could have snagged about a 1R return, so 1 times the amount that you risked, at least if you were scaling out on the way up, that I like to do, and to also quickly raise your stop up to break even. Within a couple of days, you could obviously see that it rolled back over, but the opportunity was there to take advantage of it while the money was on the table to be had. So that's how I do my first part of scanning it and trying to figure out what stocks to move on to this other list that I have. So the next thing that I'll do is I'll go through my entire list and see what stocks are setting up, which ones are giving me the best reward to risk opportunity, and which ones am I going to place orders for. Now, it is entirely possible that I might not find anything, and I'm okay with waiting and not having any kind of orders for that week, and that can happen for a number of weeks in a row, or it's more about waiting for the right pitch to hit, and that's going to vary between me, between you, and between anybody else in the market. It's finding which setups are the best for you and which ones are you most comfortable with going in and risking your money, because you're ultimately going to be the one in the driver's seat that has to make these decisions. So what I'll do is I'll add everything to this list right here. So this is a list that's called interesting ideas, and so I'll keep this list, and most of the stocks that come onto this list come from ChartYourTrade MRI. Some of them will also be ideas that Adam highlights in the Advanced Stock Report service. Some of them are just ideas or stocks that I want to keep tabs on for whatever reason, right? Like Riot was one, didn't pass any of our scans, wasn't something that Adam was interested in at all, but it's something that I wanted to keep on the radar, and just it's something that interests me, so I put it on the list. Well, why not? So I'll go through the entire list and see if there's anything that is setting up or anything that I'm interested in. Let's see if anything happens to jump out as a setup right now. Maybe Tesla. Net is interesting. PayPal. BlackBerry just exited my last bit of BlackBerries. Let's use BlackBerry as an example, and let's just clear move that flag up for a minute. So let's say that I wanted to enter BlackBerry, that I'm thinking about it for next week, and that if it climbs back above what might be resistance, I'm not saying that I'm taking this trade, but let's just say in this example that I'm using this as my entry point, right? So to really kind of extend it from that, what was a floor developing now is starting to develop into a ceiling again. Let's say I'm using that as my entry point, and that I would use this low here, right? So 1232, just checking out this low over here, 1251. Yeah, so let's say I'm using this low, 1232, and I would enter somewhere in the ballpark of 13. The next thing that I'm going to do is I will go back over to ChartYourTrade, open up the position size calculator, and using the position size calculator, I'll figure out the number of shares that I want to buy based on the percentage of my capital that I want to risk. Now, typically I like to risk 1% of my capital on every single trade. So for example, if it's a $10,000 account, then I'll be risking $100 on every single trade. If it's a $100,000 account, I'll be risking $1,000 on every single trade. And that really helps normalize the risk in the portfolio, taking the same amount of risk on every single trade. And it also allows me to leverage a position where my entry point and my exit point are close together, because I'm able to buy a lot more shares and still only risk just this much. So in this example, let's see, well, what did we say we were doing with BlackBerry? So we were going to enter at 13, exit at 1232. So let's do 10,000 and risk 1%, enter at 13, exit at 1232, and then compute. And so this is what's going to tell me how many shares I could buy, what my position size is going to be, and how much I'm risking, right? So I do that. And then the next thing is just simply entering the order with my broker, and that's it for that part of the trade. So the last thing that I do before I place the actual order is I'll fill out my trading plan, and I go off of this trading log template that I created a while back. It helps formulate your thoughts, and it's an excellent tool to figure out all the different nuances of the trade. So not just the position size and the ticker, but to also look at, okay, well, where did this idea come from? What do I like about this particular trade? Well, what's the overall health of the market? How does the trade itself feel? What does the other side of the trade feel like? What does it look like as a neutral observer if I wasn't going to take this trade? And just working through all those different kinds of thoughts really helps in the overall management of and setting up the plan for the trade. And then after that's all written, then I'll go and execute the order. Or actually, I'll go and I'll place a buy stop order with my broker, so that way I'm able to enter the order on the weekend, and if it triggers during the week, then I know exactly where I'm going to get in. I already know exactly where I'm going to get out with a loss, and I also know exactly how much I'm risking on that particular trade. Now, the last thing that I do for my trading routine is I will go and I will review all of my open positions and see how I want to manage the position. Are they getting close to a multiple of the amount that I've risked? And figuring out at what price, if it does hit, I'll start to scale out, and how much I'll scale out, and under what circumstances I'll scale out. I'll also set up a plan for how I'll behave defensively. So if I get stopped out, where am I going to adjust my stops? If a stop is not hit, but it's giving a defensive sell signal, for example, breaking below a moving average or closing below a moving average or a trend line, then how am I going to respond? Am I going to sell out a portion of my position? Am I going to completely blow out of the position? I like to figure out all this stuff well in advance, so that way during the actual trading day, all I have to do is execute my plan. And as somebody that trades part-time, it's crucial to have a plan already set, because it's rare that I'll have a lot of time at the end of the trading day to sit there and think through, okay, this is happening in the market, what am I going to do? And it's a lot less stressful to have everything already planned and just worrying about executing the orders. I'm sure that's true whether you're trading part-time or if you're trading full-time. Definitely a lot easier to just execute versus trying to figure out a plan when there's all the bullets whizzing by. So that's my full trading routine, and it takes me anywhere between an hour to about 90 minutes to work through this entire routine generally on a Sunday. So that's it. Thank you all so much for watching. I truly, truly appreciate it. If you have any questions at all, please leave them in the comment section below and I will personally help you. Also, if you like this video, click that thumbs up button. That's really going to help us. And also make sure that you subscribe to the channel so that way you get every single update. Thanks again for watching, and I'll see you again in the next video. Take care. Have a great day.